The internet is constantly selling people the idea of easy money. Every single day, you see videos about getting rich fast, turning $100 into $1 million, retiring at 25, making passive income while doing absolutely nothing, or becoming financially free in 6 months. And honestly, the craziest part is that millions of people actually believe it. People risk money they can't afford to lose. They chase hype, jump from one trend to another, buy random coins, follow fake gurus, and eventually lose everything they spent years working for. And meanwhile, people are slowly forgetting how real wealth is actually built. Not through hype, not through gambling, not through shortcuts, but through patience, consistency, discipline, and years of intelligent work. And that's exactly what this video is about. Today, I want to show you my personal investment strategy for the next 20 years. This is not some become rich next month strategy. Actually, it's probably the opposite. I'm trying to slowly and safely build a strong capital base that can support me and my family in the future. And in this video, I'll show you the 4 main categories I personally invest in, how I think about risk, how I structure my portfolio, and why I believe long-term investing is one of the most important skills a person can learn today. Make sure you watch this video until the end, because I've been studying investing for more than 6 years now, and if I had known back then what I know today, I would have avoided a lot of expensive mistakes. This video is not financial advice. I'm simply sharing my personal decisions, my own philosophy, and the system I personally follow. My name is Timothy. I'm 23 years old, and I live in Russia, in a city called Voronezh. I'm married, and my wife and I are raising our son. Right now, I actively work, run projects, and try to increase my income. But no matter how much I earn, a part of that money always goes into investments, because my goal is simple. One day, I don't want to work because I absolutely have to. I want my assets to work for me and for my family. And no, that doesn't mean I want to stop doing meaningful work or become lazy. I'll always find something to do, but I want protection. I want stability. I want freedom. I don't want my family's future to completely depend on whether I can work tomorrow, because life is unpredictable. You can lose your income, your business can fail, the economy can change, your health can suddenly become a problem. And honestly, life recently reminded me again why I think this way. About 2 weeks ago, Instagram deleted my account with 15,000 followers, and that account was one of the main traffic sources for my business projects. So almost overnight, my income dropped dramatically. And I'm not saying this to complain. I'm saying this because many people online pretend that their life is always perfect, like they never struggle, like they never lose, like they always win. But real life doesn't work like that. I still have difficult periods. I still deal with stress. I still make mistakes. I still have uncertainty in my life. But even during difficult moments, I continue investing, even if it's only $10, because consistency matters more than intensity. And honestly, I think this is one of the biggest reasons most people fail at investing. People treat investing like entertainment. They constantly want excitement. They want fast profits. They want action every day. But real investing is usually boring. Most months, nothing dramatic happens in my portfolio. I simply continue buying assets. That's it. And I actually think that's a good thing. Because if your portfolio constantly creates emotional stress and chaos, eventually most people break psychologically. That's why I built my strategy around sustainability. I want a system I can realistically follow for decades, not just for 6 months during a bull market. Because almost anybody can look smart during euphoric market conditions. But real investing starts when markets become scary, disappointing, or boring. That's where consistency matters the most. So what exactly do I invest in? My portfolio is divided into 4 different categories, and I do this because I never want all my money exposed to a single risk. A lot of people think investing is mostly about making money, but honestly, I think investing is mostly about managing risk. Because every single asset has risks. Real estate has risks. Stocks have risks. Crypto has risks. Even holding cash has risks because inflation slowly destroys purchasing power over time. So instead of trying to find one perfect investment, I focus on diversification. Each category in my portfolio protects me from different types of problems, and mentally, diversification also helps me stay calm during market volatility. The first category is real estate. Right now, I own a small apartment. It's around 25 square meters. It's still under renovation, but my plan is to rent it out and use it as a source of passive income. I also own land that I either plan to resell in the future or use to build rental property on. To me, real estate is one of the most fundamental assets in the world. People will always need places to live. And what I personally like about real estate is that it combines two important things: long-term appreciation and cash flow. Over time, good real estate usually increases in value, but at the same time, it can also generate monthly income. And psychologically, I also like the fact that real estate is a physical asset. You can see it, you can touch it, it feels real. Of course, real estate also has disadvantages. It requires capital, it's not very liquid, sometimes repairs become expensive, sometimes tenants create problems. But despite that, I still believe real estate is one of the strongest long-term assets for building stable wealth. The second category is the stock market. I invest in stocks and bonds. And when it comes to stocks, I mostly focus on large, stable companies that pay regular dividends. Because I'm not trying to gamble on random companies that might disappear in 5 years. I prefer businesses that already have strong positions in their industries. And another reason I personally like dividend stocks is because they create real cash flow. A lot of investors focus only on asset prices going up, but I also care about assets paying me while I continue holding them, because that changes the psychology completely. Instead of constantly thinking, when should I sell, I can focus on building a portfolio that slowly starts paying me more and more over time. And honestly, I think that mindset is much healthier for long-term investing. I'm not trying to constantly predict market movements, I'm trying to accumulate productive assets. And when it comes to bonds, I personally prefer government bonds, because in this part of my portfolio, reliability matters more to me than maximum returns. I don't need every part of my portfolio to be aggressive. Some parts are there for growth. Other parts are there for stability. And I think many beginner investors underestimate how important stability actually is. Because if your portfolio is too aggressive, eventually emotions start controlling your decisions, and emotional investors usually lose money. The third category is cryptocurrency, mainly Bitcoin and Ethereum. I store them on a cold wallet because I believe security and ownership are extremely important. And yes, I fully understand that crypto is volatile. I understand the risks, but I also believe that Bitcoin especially is slowly becoming a globally recognized asset. More institutions are entering the market. Governments are talking about regulation. Large companies are buying Bitcoin. And over the last few years, crypto has gradually moved closer to the traditional financial system. But even though I believe in crypto long-term, I still don't put all my money into it, because concentration creates unnecessary risk. I've seen many people online go all in during bull markets and feel like financial geniuses, and then one crash destroys years of savings. That's not the type of investor I want to become. I'd rather grow slower but survive long-term, because survival is the most important rule in investing. If you stay in the game long enough, compound growth eventually becomes incredibly powerful, but you only benefit from compounding if you avoid catastrophic mistakes. And finally, the fourth category is my reserve fund. This includes cash and precious metals. A lot of people underestimate how important reserves actually are, but reserves create stability, and they also create opportunity. Because when markets crash, most people panic because they need money. But if you have reserves, crashes become opportunities instead of disasters. Instead of fear, you start thinking, maybe this is actually a good time to buy. And honestly, that mindset shift is one of the biggest psychological changes investing gave me. Now let's talk about the main principles behind my strategy. My rules are actually very simple. Assets must be reliable, scalable, fundamental, and easy to manage long-term. I don't want investing to become a second job. I don't want to stare at charts for 8 hours every day. On average, I probably spend 1 or 2 hours per month managing my portfolio. That's it. Because for me, investing is not entertainment. It's infrastructure for my future life. And of course, I didn't build this strategy overnight. I started studying investing when I was 17 years old. At first, I knew almost nothing. I made emotional decisions. I chased hype. I focused too much on quick profits. But over time, I started realizing that successful investing is usually much simpler than people think. The difficult part is not understanding investing. The difficult part is controlling your emotions. That's what most people fail at. People panic during crashes. People become greedy during bull markets. People constantly compare themselves to others online, and that destroys rational decision-making. Over time, I studied different asset classes, tested ideas, made mistakes, and gradually refined my approach. I started buying crypto in 2023. I bought my first real estate in 2025. And the biggest lesson I've learned is this: Long-term investing is mostly about consistency, not excitement, not speed, not trying to become rich in 30 days. Real investing is honestly pretty boring most of the time, but boring is often profitable. People want instant results, but wealth usually grows slowly at first, sometimes painfully slowly, and that's why patience matters so much. A slow but disciplined investor will usually outperform the emotional person constantly chasing trends. And one thing I've realized over the years is that time is probably the most powerful asset any investor has. Most people seriously underestimate what consistent investing can do over 10, 20, or 30 years. Because humans naturally think short-term. We want results immediately. But wealth creation is usually exponential. At first, progress feels small, almost invisible. But over time, investments, cash flow, appreciation, and compound growth start building on top of each other. And eventually, the process becomes much faster than people expect. That's why I don't obsess over becoming rich quickly. I focus on staying consistent long enough for time to work in my favor. So no, this is not some get-rich-quick strategy. Actually, it's probably the opposite. It's a slow strategy, a disciplined strategy, a long-term strategy. But personally, I believe that's how real wealth is built. Not through hype, not through gambling, but through years of intelligent and consistent decisions. And honestly, even though my portfolio is still relatively small today, I already feel more financially confident than I did a few years ago. Because now I have a system, a direction, a long-term plan. And I think that matters much more than trying to look rich on the internet. So, if you're also trying to build long-term wealth, passive income, and financial freedom, subscribe to the channel. I'll continue sharing everything I learn on this journey. And hopefully, over the next 20 years, we can all become financially stronger together.